Hello, everyone. I'm Steve Carver, and tonight we're going to be talking about enhancing some really important management and business skills, focusing on bookkeeping, forecasting, and negotiating. I've been giving this class now about 19 years, and I've made some major changes in it this week. So if you've joined us before, I'm sure you'll notice the changes, and I do hope that you'll very much enjoy them. My name is Steve Carver. I'm the founder of the Academy of Entrepreneurs and Associates. Been working with entrepreneurs for 19 years and running equipment businesses and doing a lot of other things. We are sponsored in these programs by the Small Business Center at James Sprunt Community College, where Wynne is the director. I want to tell you that tonight we are really striving for, my goal is to help you get to the next financial and strategic mile marker to help move your business forward. As we go forward, we'll be working really hard to do it. Again, I'm Steve Carver. I'm in Dunn, North Carolina. This is my presentation, number 1277. So we're moving right along, and I'm glad that you joined me. I invite you to email me at any time. My email address is stvcarv@aol.com. Please send me any questions or requests that you have, and I'll be glad to help you any way I possibly can. I am not a lawyer or an accountant, just a fellow that's been in business for 66 years. Looks forward to working with customers nationwide. I've been in about 12, 15 different types of companies, so I've got a lot of history, a lot of experiences I can help you with. Made a lot of mistakes that I've learned from, and I look forward to sharing any information I can to help you get to the next step in your business. The same is true for Joey Wynne, our director at James Sprunt Community College Small Business Center. Joey is a wonderful director, and she's looking forward to helping you any way that she possibly can. If you're in the Dublin County, Greene County area, Jones County, and would like some assistance in any way, please give Joy a call. Set up an appointment. She's there to help you. And if you're in an area where you don't know where your small business center is, just drop me an email or mention it over in chat, and we will indeed get you hooked up with the center closest to you, and look forward to doing that without a doubt. Let me invite you to go over to the chat board, and if you would, log in there with your name, city, and email address. That way I can make sure I've got your email just right to send you the information that you need. We send out study guides before and after each program, so you've got a bunch of them in the mail already if you were pre-registered. If not, you'll get them tomorrow. Two different things in this one is a course quiz. For the entire 8 weeks course, a quiz questions inviting you to fill those answers out. Next week, I'll send you the quiz with the answers. Before, I've been sending the quiz with answers to begin with. This time, I'm changing it up a little bit and see how you do on them. Also, you've got a quiz just for tonight's class, which I've already sent to you in advance, but the one that I'll send to you tomorrow has the answers written into it, so that if you are writing a paper like Tiffany or doing some more work, you'll have a lot of good information to build into your studies. Next week, we'll be wrapping up this semester, talking about some very important skill building with taxes, record keeping, depreciation, audits, and also a good section on some secrets to help you sell in selling and closing deals. Tonight we'll have quite a bit of that too with our negotiating and forecasting work. I do keep up with attendance, and I want to thank you guys we got a bunch of you with perfect attendance going on. That'll help you get an extra mark on your certificate. So keep coming. It's been my pleasure to work with you. And also, if you plan to keep joining the classes, we look forward to working with you any way we can and keeping up with attendance so we see which certificates that you qualify for. So we had a great attendance in this semester with lots and lots of people that's been coming and coming back. Let me mention saying thank you to some of you who are doing a great job. Sarita Sampson, been attending with us on a regular basis. She is our senior member of the Academy of Entrepreneurs and Associates. as a senior 16 Academy member, a Master 16. Sherry McQuarrie in Charlotte is a Master 4, and she's doing a great job. She is a book writer. Dr. Mary Young over in Warrington is a career educator, a book writer, and video maker now. And she's in Warrington and does a great job with her new career, calling herself the fairy godmother of education. Edna Jackson, hey Edna, glad to have you back with us tonight. She's a Master 7 Academy member, very loyal member of the Academy. Hey Nisha, good to have you back with us tonight over in Durham. Appreciate your attendance. I'm looking forward to getting some information from you about your business and some photographs so I can help promote it. So looking forward to hearing from you, and thank you for joining class tonight. Jessica in advance has been with us on a regular basis. She's working hard on her business. And Adrienne Mack in Greenville joined us last week. She's a Master 3 associate and first in class in a semester in 1921. Adrienne is a great member, great business lady. Look forward to seeing her back as well. Jennifer Baker, good to have you back with us tonight, Jennifer. Jennifer has been working really hard and getting her business up and running. She's been in the accounting business and bookkeeping business. Now she wants to start her own, and off to a great start with some web presence. And she did send to us her new mission, vision, and promise statements. Thank you for that work, Jennifer. And I look forward to working with you any way we can. And there's Ray Fox. Ray is in the outboard motor repair business over in Oriental, down in the Bayboro area, Oriental, and just doing a good job getting his business up and running with a good new group of customers. Ray, congratulations on getting those new customers in and contacts. And I did notice that you got some new videos putting up some action shots. I really like that picture showing the water and the boat. And you're getting ready to work on it. That's the kind of photographs customers like. They feel comfortable with. They warm up to that. So you keep that up, and it'll do a good job for you. Sonia Roberts in Charlotte is our #1 roofing contractor in Charlotte, and a Master 5 member of the Academy. We appreciate her and all that she does for the Academy. And there's David. David, congratulations on your business up and running, starting to get some customers now. And I'm proud of you. I know how hard you work and how hard you continue to work on behalf of your business and for your customers. And congratulations on being a Master 1 member and for your attendance in this semester as well. And hey, Johnson, good to have you back with us tonight. Johnson Sheffield, CPA in Warsaw, Master 1 associate, and then new granddaddy, new proud granddaddy. So we're glad to have you with us tonight, Johnson. Thank you for joining us. And in these subjects, your expertise, anytime you want to join in and add a little advice or comments, we'd be glad to hear from you. Shannon King and Faison in the electrical contracting business and advanced academy members. Shannon, thank you for your continued choice. Hey, Chessa, good to have you back with us tonight. I hope things are well with you in Virginia and with your active duty in the Army. Thank you for your service. Let us know any way that we can help you as you want to start moving forward with your business goals and dreams. We're here for you and really appreciate you. I also appreciate the comments that you're making in your Facebook presentations, encouragement, and faithful information that gives us all a fresher, better outlook on life in general. Thank you for sharing that with us all. And hey, Kia, good to have you back with us tonight, and thank you for all that you're doing. I am noticing that you're putting out some new advertising and marketing, and I really like the discount coupons that you're offering. This is the look and hook marketing that we've been talking about. I hope it's paying you a dividend, and thanks for your effort. I hope it really works out good for you. We're all pulling for you. Again, please find me on Facebook. I'm listed as Steve Carver or Anthony Stephen. You can find me either way. And there's a lot of Steve Carvers on Facebook, as there are so many different names. But I'm the one that's just got the blue skies and the clouds and sunshine. I look forward to connecting with you there. As you learned with your previous attendance, my job is to be a little bit assertive and to try to motivate folks to get to that next step in your business, because sometimes we all need a little encouragement. Forgive me if it seems like I'm stepping on your toes. I'm not doing that at all, but I will continue to be assertive and motivate. And now I'm wanting to tell you, as a business person, you need to be doing the same thing. Marketing is motivating. Marketing is motivating, and cash flow doesn't happen until we start marketing and move things along. So just get it in your genes and get ready to help push people along no faster than they want to go. But we do have to motivate folks when it makes it happen. Through this series, we've been reciting some famous quotes from famous people related to getting businesses started. Walt Disney said that it's time to stop talking about it and get working on it, and I certainly agree with that. And all of y'all with your regular attendance and working, you're certainly doing that. Mike Ventura said there's no finish line, it's 1 mile marker after the other. It's just keep right on going, 1 mile marker after the other. And tonight, we want to get past another mile marker on nailing down some business skills. Bill Gates said we'll learn more from our unhappy customers if we work with them and make them happy than any other place. I tend to agree with that. So be willing to spend time with those unhappy customers, listen to them, see what needs to be done to help them move along. Nelson Boswell said, give the people a little bit more than they expected. If you leave them with a good taste in their mouth, they really like that. That's the customers that are going to come back to see you. That's the customers going to recommend you to the next person. So I feel good about recommending that. Mike Zuckerberg said that the biggest risk we'll take is not being willing to take any risk. If you're going to be in business, you're going to have to take some risks. So if you're not willing to take risks, you're probably not going to do well in business. So Jeannie Rometty says, our value is not really what we know. Our value is not really what we know, but it's what we share. What you're willing to share is where your most value comes in. So when I think about you folks that are willing to share, and you're doing it all the time. Dr. Mary Young has been sharing all her life, and Johnson sharing good advice with his clients all his life. That's the value. So it don't make a lot of difference how much you know till people know how much you care and how much you're willing to share. So that's good advice, Jenny, and we appreciate you sharing that with us. We skipped over the 40 drill skills last week, so we're going to pick them up tonight, and we'll do 25 through 32, and then next week we'll do 32 through 40, working on our drill skills. You've got a handout with these. I encourage you to spend time with that handout, look at those videos, and if you'll paraphrase those handouts and send them back to me just on the Word file, just paraphrase 1 or 2 sentences for each one on how these skills, you will use them in your business. It'll really help you build self-confidence, and it'll be a qualifier for you to qualify for more certificates as well. So number 25 is where we're picking up. So what I want you to really be aware of and pay attention to the handouts that I'm sending to you. Sometimes we get more information from what people didn't say or what they didn't do or what they didn't show you. Nonverbal communications is really important when you're working with people. So be very much aware of that and spend some time with the several handouts that I'm sending to you related to nonverbal communications, and we'll touch on that a little bit longer as we go forward. Remember again, as we just said earlier, what motivates other people is an assertive person. So maybe you had never thought about being assertive. Maybe you had a little negative feeling about it. Well, let's get past that. Being assertive is a good thing. You don't want to be pushy. You don't want to go too far. You don't want to be a bully. But indeed, you need to motivate folks if you're going to have a successful marketing campaign and move people forward. Let's get this down pat so you can be thinking about it this week. There's 2 words related to taxes that are oftentimes confused, and I will make it really clear. Tax avoidance, avoiding taxes, avoiding paying taxes you don't have to pay is a smart thing to do. And it's something that we need to do. So yes, tax avoidance, let's do it. Let's make that happen. Don't pay taxes you don't have to, and be aware and find out what it is. And that's where accountants and bookkeepers can come in and help you, because these laws change all the time, almost annually. and you have to get some good advice on doing that. I'm not the person to give you tax advice. I am the person to tell you to find good tax advice and do tax avoidance as best you can. Tax evasion is a bad thing. It's a crime. There are laws against it. You go to jail, have fines, have penalties, ruin your business. So tax evasion is a no-no. We don't want to lie and cheat and misrepresent. With tax evasion, that's a no-no, but we do want to do tax avoidance. Now, next week, we're going to talk about some things that are important with tax avoidance, which are good record keeping and also how depreciation works for you and deductions. So next week, we're going to talk about all three of those topics to help you do better at tax avoidance. So that's what's going on then. So as we're ending our series, our semester, I want to remind us, as we said up front, it's not really how many times we get knocked down or we get told no that counts. The key to staying in business is being able and willing to get back up, to stay in the race. Entrepreneurship, winning the race in entrepreneurship means staying in the race. And having the endurance to stay with it is a major, major key. So just keep that in mind, just a little encouragement. Are you going to be known as a taker or a giver? Members of the Academy of Entrepreneurs and Associates, we strive for mutual helpfulness, and mutual helpfulness means being willing to share, being willing to give to other people to help them improve their station in life, being willing to give win-win business deals, not to be known as a taker, someone that's taking advantage of people or situations, but we're people that's in business for the long haul. We want to stay in business a long time, and you do that by creating a reputation of being a giver. And we'll spend more time on that as well. When you're being the person that's helping others, when you're letting your light shine, you're sending warmth out, you're sending light out, and helping others is the way that we go about being the best people that we can be. I'll hear a lot of people say, have a blessed day. This is such a blessing here and a blessing there. Well, let me share with you. You can have a blessed day when you're being a blessing to other people. You and I need to be the ones that are carrying that testimony and being willing to step up and step out and speak up to help others be blessed. And by doing that, you can really say, have a blessed day. Let's work on that individually. And we talked about this in week 4, the magic marketing moment, in week 3. What is that magic marketing moment? We need to review it. So here we go. When you're using the Golden Goose marketing campaign that we're going to use, there's 3 or 4 different important steps that you have to do to create that raving fan customer and to enjoy sustainable business. Number 1, we need to tell the customers that we want to be a raving fan by saying, I'm going to do all I can to see that you're 100% satisfied. And you're going to be so happy you did business with us, you will send your friends and customers to do business with us as well. That's step 1 and step 2. And step 3 is later on you say to them, after you do a deal, after you close a deal or you give them a quote, look, I really want to make sure you know I'm after your 100% satisfaction, so tell me what we can do better, what we can do different. What products do I need to sell? What services do I need to do? What changes do I need to be? How can I be a better company in serving you? Talk to your customers like that. Use your own words, of course, but ask them how your company can better serve them. That's the magic marketing moment. Because at that point, they're going to see you're serious, and then you're able to say, now, when was it you were going to have another order? Who was it you mentioned might be getting ready to buy something? You get information from them. That's the magic. And you take that information, put it into your marketing campaign, put it into your forecasting, put it into your planning, get the feedback from your customers, and then you enjoy sustainability. Because by getting this feedback, you're going to understand what people want and what people need. That magic marketing moment is where you get that information from them to help you move forward. So number 32, Always in every class, I remind us that videos are so important in today's world. Videos are the key marketing component on the internet today for small businesses. You see it in websites, you see it in TikTok, you see it in Facebook. And my friend, every one of us in class tonight, if you're not into videos, you need to get there, because it is so powerful to help you start selling your products and your services. So just know that's a fact, and let's move forward with better and more videos. I mentioned to you that using the platform that we're on tonight, freeconferencecall.com, that we're all on here tonight, is the very easiest way that I've experienced making a video. You can be a member. You need to go ahead and join, get your own account at freeconferencecall.com, and then use that platform to make videos, to name them and to save them. And it's just a good way to practice and to get it done sitting right at your desk, because you can save it on Free Conference Call and go from there. Give it a try. Get your account and go ahead and start making your videos. If you're having any trouble with it at all, just send me an email and maybe I can help hook you up. Or they got a good tutorial and chat box on freeconferencecall.com. It's an excellent place to start learning to make your videos. And then you tie that in with your own YouTube channel, and you're on the go then. You'll be doing it just like I do it every time. So football season's around the corner, and by golly, if you're going to be in the game, you got to get down out of the bleachers and get in the game. So that's what I'm encouraging all of us to do. And tonight we're moving away from marketing and Chamber of Commerce talk and such as that, but I do want us to remind us of some things that we need to be doing now, because cash flow equals marketing. So get busy on Facebook, get your web pages up, get your YouTube videos started, start getting your testimonials, and some of you are doing a great job with this, and I congratulate you. I want to see your mission, vision, and promise statements, but more importantly, your customers want to see them. Your customers are important to them, so go ahead and get on with it. So many of you, several of you have already done that, and some really good ones, and I appreciate what you've done. If you're not showing a menu of what you've got to sell with some prices on it and some photographs, you don't have a chance to get started. So get busy with your photographs and your menus. Send me copies of it. I'll help spread the word, and I'll help you get them on social media as well. Do you have your business cards? Are they printing? Can you hand those out? Can you send them anytime you're talking with someone? Send me a picture of your business card. I'd love to see that, and I'll do that. A reminder: fall is here. Okay, we're 1 week away from Labor Day. Fall season is here big time, and it's one of the biggest marketing seasons for entrepreneurs everywhere. So in your marketing plan, in your fall marketing plan, let me challenge every single one of you to come forward this week and next week with some promotions that are related to fall marketing. Have some verbiage in there mentioning the fall season, offer some coupons or some special programs, put some hook in some advertising. Take advantage of this buying season, because people are in the mood to spend some money, so do that. Moving to our main topic tonight, let's talk about that. Bookkeeping, forecasting, negotiating, focusing on bookkeeping first. Let me mention to you that I've left out of previous classes something I want to make sure that's for sure. So zero in on this and take a note if you would, if you're making notes. The balance sheet. The balance sheet is generally the last document that's looked at on all the bookkeeping and accounting reports. So what is a balance sheet for a small business person? Well, it's not everything, but it is specifically something. You need to know the definition of it so that you're not confused. Everything your business owns, the assets, are listed on that balance sheet. Whether you're borrowing money, your liabilities, money that you owe, equity that you have in your assets. If it doesn't balance, if you don't have all this there and it doesn't balance, then your books are not correct. So here's what I want you to remember. The assets that your business have equals the liabilities plus the equity. So the value of the equity minus the amount of money you owe ends up, the total of that will be your assets. That's how you come up with that definition, and that's a basic one that you want to remember. The P&L statement, or the profit and loss statement, is also called a business income statement. It's a very special document as well, and it's a part of every monthly bookkeeping report that comes out of QuickBooks or such as that. It's going to show whether your corporate operations are profitable on paper, but it does not tell you if the bank, if you have an ample amount of money in the bank. It's just telling you what the paper records are. It doesn't tell you how the cash is coming in and out. So the profit and loss statement is an accounting bookkeeping factor, but it's not something that you can run your business by, because you're going to need your cash flow records and cash flow forecasting to really know where you stand, able to pay your bills. I want to emphasize too that it's really important that you separate your business funds from your personal funds as soon as you can. Have business accounts, have business money market accounts, have business savings accounts, have business credit cards, and do the same thing with your personal business. When you start co-mingling your business and your personal funds, it blurs a lot of legal lines between you and your entity. And if a dispute ever occurs, it might cause you some big troubles with asset liabilities and keeping a legitimate tracking of business tax write-offs and such as that. So be careful with that. As soon as you can separate your business and your personal funds, the better off you're going to be. Yes, Johnson.
I'm working with a client that's coming and has spent some $30,000 trying to maintain this. It's critically important not to mingle.
Johnson, your audio is coming in skipping. I can't hear you well. Try that again.
Let me try to find out what's going on, and I'll tell you later. I'll talk to you in a minute.
Okay, you break up a little bit, but thank you. We're looking forward to that advice. Thank you. All right, let's do some plain talking now about bookkeeping. I want you to remember these points more so than anything else that we talk about. You want to make sure that you pair your chart of accounts in your bookkeeping work with your business plan account. When you name your accounts the same names or like names all throughout your budget and your business plan and your chart of accounts for your bookkeeping work, it makes everything easier and a whole lot easier to explain. This is really important on understanding what your bookkeeping reports look like when they come back to you. And it helps you explain to your accountant what's going on and helps them track and give you better information. I want you to try to do your best to determine the actual profit margins that your individual profit centers are bringing. Not just saying, I sell all this stuff, I sell all these different items. It's really important as a manager that you understand what kind of money that you're making with the different items so you can make adjustments in your different profit centers. A lot of your profit centers are not going to be designed to make high margins, but if they're bringing in a lot of daily traffic and new customers, then they're very good to have. So you just need to monitor how that's doing, and you can do that with your bookkeeping system. Every line is important in your bookkeeping report, and I want you to try to understand what each line represents. And again, that gets back to the way you name them. You name your chart of accounts. These different lines in your accounting will help you understand what's going on. So take the time to do that. So why do we even have bookkeeping? At the end of the year, we can add up all of our numbers and tell if we had a profitable year or not. But there's been a lot of water under the bridge here in the year. What you want to be able to do is weekly, daily, and monthly for sure is to get a summary of how things are going. What things are doing well, what things are not doing well. Are you making money, are you losing money, are you burning out your cash faster than it's coming in? How did accounts receivables look? Bookkeeping is giving you an up-to-date, current viewpoint of how your business is doing financially. There are other factors that come along that CPAs and accountants they help you look for. They look more for the long term. They look over the bookkeeper's shoulder to see how the annual account is going, your tax returns and reports and such as that, things that are related to the stockholders or to the officers. The accountant's role is very important. The bookkeeper is an accounting function, and the accountant themselves is a very important function. Sometimes in businesses, a bookkeeper and accountant do both the work. One person does both the work. Usually, though, as companies grow, they'll have a bookkeeper internal or virtual, and then they go to a professional CPA to wrap up their annual books or to help put out fires as they come along. But getting back to our topics tonight and why I'm talking about it, because I'm not a bookkeeping expert, but I am a person that's been in business and a management and ownership long enough to know that getting information from your bookkeeping reports that are coming to you on a monthly basis is a super important sales management tool. And we need that information current instead of waiting a year or 6 months before we see how things are going along. And that consistency on being aware of it and getting the information from our bookkeeper and from our bookkeeping records makes a world of difference in how effective you can be as a business owner, and especially related to sales and such as that. So the bookkeepers they're all about financial transactions, keeping up with your debits and your credits, all about invoices. As you get into business and you start making sales, you do that through a document called an invoice, and usually the bookkeepers create the invoices that go out where customers know that they need to pay you. And also maybe when your vendors sell you items, they send you invoices, and it's usually the bookkeeper that pays those and keeps up with those records. And they do it on the screen, on general ledgers, on paper, or other different types of recordings, and do that. Oftentimes also the bookkeepers will take care of payroll information, but more and more small companies are giving the payroll work to outside contractors or virtual assistants from the payroll side. So that's something that's changing quite a bit these days. But basically now, always the basics. Let's talk about that. The bookkeeper's job, I like to say, is kind of an easy job when we're looking at the simple basics, because a bookkeeper wants to start out at zero every morning with their clean sheet of paper with a zero on it. List down all the information that has happened the day before, and take in and take out, break down all the invoices and see where the money came from, see where it went, and end up with a zero so that everything balances. Zero equals a balance. Everything came out just right. All the big numbers, when they were separated out and then put back together, came back to where they were supposed to be. So we call them different items: the transactions, the journal entries, posting, trial balances, worksheet, adjusting journal entries, financial statements, and the closing books. Notice it's going in a circle. We're starting at the top in the morning, and then we're looking at all the invoices from that day all the way through. We work them and end up with a zero at the end of the day, and then we close out those books. That's called a book closing with a financial statement for that day. This will be true with all the money going out, and the same thing with any money coming in. You keep your journals and your ledgers for incomes and expenses, and they all need to balance at the end. So that's what we're going to do. So it's really important that you keep in mind that the bookkeeper is working through all these different steps, and it's important that you understand that they need to have time and space and not be interrupted if they're in doing all this no more than you can, because it's tedious work where they're doing it by paper or on the computer, to give them a good space to work and a good time to do it. If your bookkeeper is also the person that's answering your phone for you, that's doing this and that, running a lot of errands, then you don't have to understand there's going to be a lot of room for mistakes in their day's work. The main tool for a bookkeeper is the chart of accounts. And the chart of accounts is true with every business person, every business. They have a chart of accounts. I keep mine right here on the desk in front of me. And it's just a list of account numbers for money coming in, money coming out. So you have your different accounts that are numbered. Usually, when you're first getting started, a bookkeeper will generally set up their books with their asset accounts. Usually they're 100 series accounts. That means each of these accounts will start out with a 100 number. And the money going out, the liabilities will be 200 numbers. And then all the other accounts are mixed up as you go. In every business, they have different items. But the money in, the money out are the main things that we focus on as you're getting started. So I'll do this. When I'm writing my checks here, I write my own checks in my business. I write my checks. I go ahead and write the account number down right in the checkbook. So when I send my books to the bookkeeper at the end of the month, they really don't have to worry about what I wrote the check for. They just see that account number. It makes her work go a lot faster, and therefore it costs me less money. So you can do a lot of things to help your bookkeeper move along if you're the person writing your checks. So again, the chart of accounts is a very important factor. And as I said earlier, as you're doing that chart of accounts, just go back to your budget, go back to your business plan, look at your different profit centers, and you can name these charts of account right down the line with each profit center, and then it's going to make it easier for you to keep up with how much money the different profit centers are making for you. Here's an example of my chart of accounts. At the first of the year, notice the different numbers. Now, after 66 years, my accounts have moved along way past 100 and 200. That's just a good indicator how old the company is. And that's an example of what I use in my business. So let's get down to some basics here. This is an example of a sales journal that a bookkeeper will have. It could be in any business. Basically, when you have your sales journals and you're doing business from bookkeeping wise, you're interested in several things. Again, it's invoicing and your different invoices. Excuse me. Different invoices mean that you have to list down what's going on in the business that you're sending to your customer, what they're going to need to pay you. So you're going to need to have a date and an invoice number on every invoice. And so you'll start out keeping your invoices in numerical order and also in chronological order. You may not think that you'll need to go back to those invoices and check them from time to time. Well, get that thought out of your head, because you're always going to need to save those invoices, and you'll be going back to them for all different kinds of reasons all through the years. So you'll need to keep up with those, again, in chronological and in numerical order to keep up with them. So notice over on your dates over here, like on the sample journal sheet, they got their date, they got their invoice number, some type of recognition on telling what the invoice was all about. Which accounts they were using. Notice they're just talking in terms of just like a plumbing outfit or a hardware store. They didn't number their chart of accounts. They just got them listed individually as if they got a very limited number, so that was the way they wanted to do it. But every sales journal is going to be different. Generally, it's a list of chart of accounts. Then you got your invoice number and your dates and your different amounts as they apply them. So to give you an example of how using the bookkeeping information in your bookkeeping system can help you determine the profitability of your business, and more importantly, the profitability of the individual profit centers that you have, and tracking your expenses. So this is an example of an invoice. We'll say that Edna has, let's say that Edna's with us tonight, and she has a gift shop where she's going to be selling candles for the fall season. She's got in a big load of candles. And so let's say that Mary was Edna's sales clerk, and Mary wrote up an invoice, number 121216, where she sold a box of candles. That's what we've got on our screen here. Notice that invoice number 121216 might mean that invoice was written on December 12, 2016. A lot of companies will use an invoice number as the date to do the chronological and the invoice numbers. If you're not writing the one invoice a day, that works out pretty good for you. So the box of candles sold for $8.56. That included 56-cent tax. The tax is busted out. Now, each one of these lines is a different bookkeeping line in this imaginary bookkeeping system we set up. So the first thing that always comes out is tax. The tax money is not ours. We have to collect it, and we have to hold on to it, and then we have to send it to the taxing agency at certain dates. So this is a good example of why you always pull your tax money out and you pigeonhole it. You put it in an account and you save that money because you don't need to spend it because you don't have to send it out. So after we take the tax away, that sales revenue was $8 for that box of candles. So now we're going to ask Edna wants to keep up with where that money came from and where it's going. So let's look at that. So Edna's going to find out here that box of candles costs $2. So $2 of the $8 is going to be earmarked as the cost of the sale for the stocking cost. 55 cents of it was her cost of freight, and that's already in the system, so that's going to be plugged in. She said she pays a 10% sales commission, so there's going to be an 80-cent commission on that sale. So she's keeping up with that in her bookkeeping system. Also, she has a customer loyalty program going on, a 5% loyalty program. So she'll take 40 cents from that sale and make a note of it that can go towards the loyalty program. See, if you're going to make an investment, if you want a return on investment, you don't have to make investments, whether it's marketing or loyalty programs, and you need to be keeping up with how much you're putting in so you can see how much revenue that's being generated because of it. Also, she's got a targeted advertising campaign for these commercials, which I encourage you to do. She had earmarked 6.5% for her advertising for those candles. So 52 cents of that money is going to go back towards return on investment on the advertising money. So from the $8, we got $4.27, or 53% of that sale was for the cost of the sale. All right, so we're knowing how much that particular profit center was bringing in, and that's a margin of $3.73. We're not going to call that profit. It's gross profit for that particular item, but not for the company. But indeed, it's $3.73 or 47%. Let's call that margin. Let's don't call it profit. So 47% of that. So looking at these numbers, they look kind of simple, right? But they can get really big for you, especially if you're in a business that's selling a lot of volume. So Edna's going to see right here, and that for her to make $100 gross profit on these candles, she's going to have to sell how many boxes of candles? What do you think for $100? She's making about $3 a box, so somewhere around 30, 35 boxes, right? So if she's going to make $1,000 or $10,000 in candles, she can automatically figure out how much she needs to sell in a certain period of time, and then weigh that against how much room she's got for inventory, and weigh that against how much cash you've got to invest in them to begin with, because we're going to learn later on what you don't want to do is to overstock and tie up all your money in items that are not turning, not making you money. And you get that information right here from your bookkeeping system, provided you have asked your bookkeeper and your software to give you this information on the individual items. Then if you got your software set up and you start selling these items and you plug them in just by item number, it automatically fills in the blanks for you. It makes it pretty easy, but there's some work to get to it to go for. But once you have your bookkeeping system feeding you information monthly on which profit centers are doing well, how things are running along, then you're going to be in a position to do a lot better managing and to figure out what's going on. So we would take each of those items off that sheet, and then we would plug them in with our transaction. We'd list them down for our journal entries, post them right into the books, do our trial balance, seeing if all the big numbers add up to the little numbers, create a worksheet, and that's when we determine if there are any problems. And if there are some problems, it's time to make some adjusting journal entries. Let's say that we collected 52 cents instead of 56 cents for tax. Well, if that error, it means that we got to pay the state 56 cents, but we didn't collect the 52 cents, so we have to make some adjusted entries there to make things come out right. Because at the end of the day, we need a zero. Who we got there?
I did not know I was unmuted.
Hey, Jennifer, say that again, please.
I was talking to my dog. I didn't know I had unmuted myself.
All right, that's okay, good. Well, I'm glad you're here. All right. So at the end of the day, everything needs to balance out, and these adjusted journal entries are really important for the bookkeeper. That's where you state down why you have made adjustments here, and sometimes those adjusted journal entries can be you get out of jail cards. So bookkeepers are often called on the carpet and accused of embezzlement or doing things wrong. And oftentimes, if they can go back to the adjusted journal entries and show why different changes were made or what's been going on, it can help explain what happened and maybe take some heat off of them. I've already recommended that bookkeepers keep up with their adjusted journal entries and make sure they're saved and kept with the book so that when they're needed or when they're talking with the accountants, they come in very, very handy on making explanations at the end of the year. So after all this is done, your adjusted journal entries are made, then the books are there. You got what we will call a financial statement, and you can close your books out. Do that every day, whether you got large companies writing thousands of invoices or smaller companies writing 5 or 6 invoices. The bookkeepers basically work on a daily basis to make that happen. Now, what I had done through the years in my small businesses were at the end of each day, I would ask my bookkeepers that when they closed out the books to tell me how much money we took in on the day before, and then show me the bank deposit where we deposited that amount of money. So I had a bank deposit that matched every day with our intake. And then we would look at the checkbook. They would have a record looks just like this related to money going out. Talk about how much money we started with, how much money we ended up with in the checking account, and to see that everything balanced there. Then you can compare the 2 sheets of paper and with their journals, and everything would balance and come out right. Very simple, very easy. Very uncomplicated with my small businesses through the years because I wanted to keep it uncomplicated. The other thing I would ask the bookkeeper to give to me is in forecasting our cash flow is what our accounts payable were on that particular time, list them down chronological in order when they needed to be paid on time, and give me that sheet every day. And beside that, I knew how much our checking account balance was, and I would check the different bills that we owed, authorize them to go ahead and write the checks during that day. The next day, they would be written for me, ready to sign and mail out, and ended up being a good system. The bookkeeper and I were always working together. However, we didn't need to be in each other's face all the time because those reports that they were giving to me every morning with the proving where the money went, and also let me know what our cash flow was and what bills were due and how much money I had to pay them, and I could check them off to make sure that we kept our cash flow in line that way. Those tips might help you, and I'll be glad to work with you anyway to help move your business forward. So bookkeeping also is the place that you need to be concerned about, because now we're talking about writing checks and handling the money, doing the deposits and such as that. It's important that you have in your mind security, 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 because we're in a world now of people being able to take advantage of you, either being really smart or with artificial intelligence or so many other things, and be aware of keeping your separation of duties in focus. I don't want to say that you can't trust people, but you really have to help keep people honest. You have to help keep people honest to do that. So writing checks and the ability to spend your money, you need to be careful with that. If you're authorizing other people to spend your money, you need to have some checks and balances in place, either with 2 signatures or certain amounts of money being all that can be spent, or money up to a certain amount can't be spent, or requiring 2 signers on every check. put in place some type of security to protect yourself and look after the money going out. Think about that. If you're doing everything with automation, you want to really talk to a professional about how to put the best security in place for keeping your money safe. If you're receiving checks by mail or customers bringing checks in, a good security factor is the very minute that a check enters your hands, your mail, your office, whatever, is to have a for deposit only stamp to stamp every check as soon as it comes in your building. That keeps a thief from coming in or somebody from robbing you some way, from taking a check that's come in from a customer and going and cashing it, because if it's got for deposit only, it's not going to be cashed. That's just a good first step line of defense that you can put into place. Another thing is, I encourage all small business owners to open their own mail. Don't give the power of opening mail to someone else in your business. It's something you really need to do yourself. That doesn't mean you need to read every piece, but you'll learn how to sort through it. When you're opening your own mail, you're going to see if your bills are being paid like you thought they were. You're going to see if you're past due on items. You're going to see if people are sending you past due notices or important delinquent information about your accounts or customer accounts. If you're not opening your mail, that means that if you have someone in your organization that is participating in some type of fraud, you won't know it till it's real late. Especially on your bank accounts, on your bank statements, you want to open those and go through them and look at them, see if you see any signatures you don't recognize, and look at the different payments that have been made on that list of payments. Make sure that you're in jive with that. Now, after you do that, you can bundle it back up and give it to the bookkeeper or whoever it is that analyzes your accounts. But the mere fact that you're opening those every month and you're looking at them, it really helps people keep people honest. It might think that they can do something with your checking account and move it forward. A lot of different ways people can steal money from you. Use it for their personal benefit by making checks out to different people different ways that it looks like they're paying a company bill when they're paying their own bill. That happens a lot. So you take precautions to keep it from happening. A good thing that with this new software that are available on the computers with QuickBooks and others, you can set up within your monthly programs where it prints out your reports, charts and graphs that are showing you all different types of things from payroll to different profit centers, where you're making your money, where your money's going, giving you color graphs and such as that. It's pretty amazing and very interesting. And so this is something you would look at your software provider, take advantage of that. You can be as sophisticated with it as you like. And if you're in the bookkeeping business, as we've got several people with us tonight that are, this might be something that you encourage your clients to do. Give them a little pizzazz, a little something extra. Don't cost you any money. Maybe you'll make a little money by setting up a more extensive program, but these charts and the graphs can be very helpful from a management tool, and it puts you in a position to give them better management information and maybe up your ante on the fees that you're charging as well. Okay, let's go to the chat board to answer some questions, some quick quiz questions related to bookkeeping. We're changing this up a little bit tonight. So question number one, these came to you earlier. What is the fundamental accounting equation that forms the baseline of every business's balance sheet? What are we after here? What is it that assets equal is the answer? So what is the answer to this one? Jennifer's already in there with an answer C. How about the rest of you? What do you think? What do you think on that? That's right. Get on over on the chat board. There we go. Thank you, Nisha. Comes in with a C. Chessa's got a C, and the correct answer is indeed C. Everything in your business owns assets must be financed either by borrowed money from creditors, liabilities, or using your own capital, retaining earnings for equity. If it doesn't balance, then your books are incorrect. So you want to be aware of the fact that needs to stay in balance. Number two, what is the primary legal and financial danger of mixing your personal and your business bank accounts. What's the danger in doing that? Limits your clients. It messes up your corporate veil and gives you some risk-related liability, forces your business to legally change, automatically triggers immediate federal audit. What do you think the answer to that one is? Okay, look here, good answers. Thank you all for joining in there. We're getting some B's, and the correct answer is B. Just like we said earlier, you want to keep your business money and your personal money separate. It can have big ramifications for you later on. And Johnson was going to talk to us about that later on, I think. Question number 3. If your business records a financial transaction only when physical cash in or out of your bank account, which type of accounting method are you practicing? Accrual, inventory ledgers, cash basis, or deferral adjustment? What do you think about that one, guys? If it only records cash, what are you doing? Well, the correct answer is C, cash basis accounting. In other words, if you're just keeping up with your finances related to cash, that can be a cash basis method. Number 4, what does a business income statement, commonly called a profit and loss, we talked about this a little earlier, what does it measure? What does the profit and loss statement measure for you? Total market value, revenues, expenses, exact live cash balances, and the total amount of money owed. What do you think about that one? Well, let's see here. It looks like everybody was paying attention, and that's right, because the right answer is B. The profit and loss statement acts as a financial report card over a period of time. But it does not tell you how much money you've got coming in or when it's due to go out. So it's just a snapshot. You can't, it's not a historical type thing that keeps on giving you information. So thank you for that. We're going to move on now. We're going to think about some other things. Business management is a challenging thing. I face it every day as y'all do that's been in business or that you're getting ready to. It goes a long way with being able to have a crystal ball, it seems like, if you're successful, because there's always something coming out of left field. And that brings us into the topic of forecasting. I think I'm the only person on the in the network that spends a lot of time with forecasting and negotiating, because I know in my years, whether you got big business or small business, it's something that we deal with every day. And it doesn't mean that you're negotiating great big contracts with customers all the time, because this is something that if we're doing it and we're aware of it and we're getting better at it, it's going to make a big difference for the long haul. So plain talk now when it comes to forecasting. I want you to remember this. Be savvy. Pride yourself in being savvy, that you are staying on top of your game, that you are keeping your radar on, that you are listening to what's going on around you. Sometimes we get into our little groove, into our rut, and we just kind of focus on the stuff that's right in our face. In other words, we're looking at the trees instead of the forest, and definitely not looking at things from 20,000 feet up. For the long haul, we need to be cool enough and wise enough to know that we're going to keep our radar on and take advantage of other things that are going on around us. I don't want to be saying that I want you to get out of focus with the things you need to pay attention in on a daily basis, because part of what we need to do daily is to keep our radar on to see what's happening around us. We want to remember that the A, B, C, D that we talked about, always be connecting the dots as we're making decisions. You will make 1,000 decisions a week, and keep in mind that when you're making that decision, Papa Steve encouraged you to take a minute and breathe. Take a minute and say, now, is this decision best if I do this, or that? How does this all fit together? Am I creating decisions that are not creating bumps in the road? Yeah, you want to be smart. Sometimes if you think about it or even sleep on it, you'll come back and say, for the long-term good of my business, I should do this instead of that. So that's weighing the risk. Weighing the risk, thinking about what is the risk that I take with this decision and what can I do to manage that risk. The good news is you don't have to be too much afraid, because with every risk, there's a risk management move you can make to help you. So think about that. And lastly, as I mentioned earlier, put seasonal marketing in your menu of important things to consider. Seasonal marketing is a big deal, and each one of us, every one of us here in the academy, every one of us here in class tonight, seasonal marketing has a lot to do with our business, how we do things. Simplest way right now is the fall season starts for me week after next. That's the fall season, fall semester. So I'm into seasonal marketing now. When I kick off our new core topics in a couple of weeks, I'll be doing Tuesday and Thursday nights. And indeed, we'll be talking about seasonal marketing right away. And I hope you're all with us, and we'll talk about it together. But put that in your thinking as you say, well, what should I consider when I'm considering forecasting? Well, of course, we're going to think about the weather. We all do that. Labor Day weekend's coming up, or summer vacations, or going on a cruise. We're going to all think about the weather forecast, and we're all going to think about, our animals, what's happening with our animals and our grass and such as that, forecasting the seasons that our animals come together or have their babies. It's important that they have the new babies in the spring, right? So forecasting there is very important. If you're into fighting wildfires, you're interested in seeing the lightning forecast, because most wildfires are started by lightning. And indeed, if you're one of those people that are fighting these fires, if on your forecast you see an area that was really dry that had a lot of lightning, you don't send people in looking for the fires before they get big, because if the lightning was there and if things are dry, there's probably a fire burning, so that goes on. So forecasting important issues to make a special note on: collecting your money. Collecting your money. Your cash flow is all about getting paid for for when you make sales. And if you've got people that's holding up your money 30, 60, 90 days, then indeed you're going to have a cash flow problem. And if it in fact gets to be big and it swells up, it can put you out of business and you'll be in bankruptcy, because you might have done a lot of business and your financial statements may look great, but if you don't have the money to back them up, you're in trouble. So no matter how good your bookkeeping system is, no matter how good anything else is, you need to be aware of how important it is to collect your money and not let customers get ahead of you on that. It can put you out of business in a hurry. Now, this is the first time I've ever mentioned this in class. However, I've mentioned it in life forever, so I put it into our lesson plan. And that is burn rate. Burn rate. We all have a burn rate. That is, how long does it take us to burn through the cash we've got on hand if we don't collect any money? What kind of staying power do we have? And that's your burn rate. And it's an important factor that I want you to put it into your vocabulary and be thinking about it. Because if you don't take care of the burn rate, you're going to hit zero in your banking account, and then you're going to be in trouble. So forecasting brings into this skill about staying alive by being aware, being savvy of your burn rate. So keep that in mind. Put that in your vocabulary. Poor forecasting or no forecasting will end up with a going out of business sign. It happens all the time. And one of the main reasons small companies get started, maybe off to a good start, but they don't make it but 5 or 6 or 7 months, maybe even a year. Lots of dreams are lost. Lots of money is lost. Lots of time is wasted. Feelings are hurt. Families are hurt. Securities are hurt. And one of the main reasons that folks like you and I lose our businesses is because we don't pay enough attention to forecasting, to things we're talking about right now. So let's don't make that mistake. What are some of the items that I want to encourage you to think more about forecasting? That's staffing. As your business grows, maybe you don't need to hire employees, or maybe you do. It's a fact that our business isn't going to grow so much and so fast. Our business isn't going to grow but so much and so fast if we don't have the people to make it happen. So that might be with employees, that might be with contractors, that might be with virtual assistants. So think now that as you want your business to grow to a certain point, just know you can't do everything by yourself. You got to have some help along the way to get a business up to be substantial enough to bring you in an independent, sustainable income. So what are you going to do about getting your staffing issues? And when you do bring in people, maybe you just need them seasonal, as we talked about earlier, but they need to be trained so that when they do come on board, they're not making so many mistakes. It costs you a lot of money. And sometimes business people just refuse to hire people because they don't want to have to pay for the mistakes that new hires are going to make. And I understand that. So that's why you want to train them. You want to encourage them to attend the webinars and the seminars possibly to help get your employees trained for free instead of it don't cost you so much money. So keep in mind about what your needs are going to be and try to plan ahead to move forward with that. As I was just talking about the burn rate, cash flow issues, predicting and forecasting what your cash flows are going to be. Like we were talking about the boxes of candles, you're getting ready to make an order for some inventory. When that inventory comes in, how much cash are you going to need on hand to pay for it, and where's that cash going to have to come from? And that may help you determine on whether or not you order a big order, a small order, or a medium-sized order, or when maybe the bills are. But more importantly, that I'll build in here now, your cash flow predictions, the forecasting has everything to do with your negotiating. So as you're looking at stocking up, then you want to think about when you're placing those orders, negotiating the very best prices you can do. Maybe if you order a few more, you can get a better price on them. Maybe if you order at a certain date, you can get free shipping. And all that's about negotiating, and everything can be negotiated. Let me repeat that. In business, almost always, everything can be negotiated in some way. It may not be the price, but it might be the freight, it might be the shipping, it might be the deposits, it might be the terms, it might be the amount of discounts that you get on it. But you have to work, you have to go out there and talk and do the negotiating to get the best deals and therefore get your best cash flow as it's coming in. Forecasting risk. As I just said, if we are thinking ahead and we're being savvy as we're making decisions about what risk that we're getting ready to face in our business, thinking about it in advance, just like we're doing right here tonight, there's a good chance you'll have a mindset that helps you avoid big problems with risk, because everything can bring a risk, and for every risk, there's a risk management tool you can do. Different categories of risk, different technologies can help you, so let me share with you. The person that can take your type of business and plug it right into their computer screen is an independent insurance agent. Insurance companies are all about insuring risk. That's what their business is. And those that insure small businesses already have the list up with what are the risks most common with different businesses, and then give you a printout right away and tell you what you need to be watching out for and maybe what you can do about it. Because most of the time, risk management is not about buying big insurance policies or about building this or hiring staff. Most of the time, risk management is doing some planning and some training and some housekeeping and some cleaning in-house that don't cost you anything except some planning and management. And the best way to save money on insurance is to do a great job on risk management. So think about what those hazards are and do it. Now, if you're just getting started and really don't have a good idea about what the risks that are involved in your business is, then what can you do? Well, you can talk to the insurance person, or you can talk with someone that's been in your type of business for a while. Talk with someone with old gray hair that's been in your type of business or many types of business, and we can tell you, we can give you a great idea on most of the risks, maybe not all of them, and I'll be happy to do that as well. Good news with AI now, with artificial intelligence, you can go right straight to AI, I'm sure, right now and type in, I'm starting this type of business in this area. Give me a general idea on the different risks that I'm taking and what some risk management tools for them are. AI will give you some great information better than I can right away. That's one of the blessings of AI now. Get the advice, though. Don't be afraid to. Your small business centers, if you go to any small business center and you tell them what type of businesses you're thinking about starting and you'd like to talk with someone about risk management, I'm sure they're going to have a world of information for you. and or you let me know and I can have a world information for you. I don't go to AI to get most of it because I know how effective that can be. So let's start talking about things that are related to marketing and the strategy that we get into it, and talk about forecasting even more. Why are we forecasting? It gets real simple. We want the right product, the right quality and style and size. We want to have this product at the right time, and we want to have it at the highest time we can get the highest price for it, right? We need to make the most money we can. And we want to buy it at the lowest cost possible. And when we do that, we want to be thinking about the risk management factors that are involved there, so that we're not going to take a loss if we don't sell it by a certain length of time. This is what forecasting is for. It helps you become that business person that's savvy enough to know what to buy and when to buy it, and have a good idea on how to liquidate it if you don't sell it by a certain date. That's what I want you to have. And you do that by thinking forecasting as you move forward. So let's have a little quiz related to forecasting. How can a newly launched business show a healthy profit on paper but still run out of money and fail? I mean, we got a brand new business. We look great on paper. We're selling a lot of stuff, but we're still out of money. What puts you in that situation? By paying all the operational expenses ahead of time, holding back too much physical cash, having high accounts receivable, unpaid customer invoices, pricing products slightly higher than the local market average. What do y'all think about that? What do you think the right answer to that? How can you have a great year, be having a great time, and be broke at the same time? I want to tell you, it happens. It's happened in my businesses time after time after time. Now, after a while, you get used to it and you prepare for it, and it helps you be a better forecaster. But what is the answer? It's C. By having people that are not paying you, having accounts receivable where you have written invoices and you haven't received money. Now, let me tell you, this sometimes is not just anybody's done anything wrong. It's just you need to be aware of it. For example, let's say you had a customer that ordered from you several dozens of T-shirts, and you went ahead and invoiced them for them, and indeed you sent them the invoices, but they're not going to get those T-shirts, say, for 6 or 8 months. So that debt for those invoices is on your debt, and the invoices is showing that the money should be in your bank account. But it's not, because they hadn't paid you for them, but it's on your books. So you have to be aware when you're looking at those profit and loss statements and financial statements about what's real money and what's paper money. And that's what this is all about, so that you don't think that everything is going just fine when indeed you're out of money and you should have forecasted or had made some arrangements to be ready. Number 6, what is the core structural difference between cash flow forecast and an annual budget? What's the difference in cash flow in your forecast and your budget? A budget is a fixed target, while a forecast is a dynamic, regularly updated radar system. Budget only tracks cash outlays. A forecast is a permanent document that cannot legally be altered once it's written, and there's no structural difference. They're just identical financial reports. So what do y'all think about that? I'm getting some mixed answers over here. What do y'all think about that? What is the difference between a cash flow forecast and an annual budget? So we're getting more A's than anything else, and the answer is A. The budget is a fixed target. It doesn't change. The budget sets your baseline goals for a year, but the cash flow is a living document that's showing you what's happening monthly and weekly on how you're coming along with your cash flow. 2 different documents, both of them very important. Number 7, which management metric tracks the exact monthly rate at which a developing startup spends its capital reserves before reaching positive cash flow? And we talked about this earlier. What do you think? Which management trait are you going to use to know how you're coming along with your cash flow? And I'm getting some B's, and that's right, it's burn rate. Be aware of that. Let burn rate be something that you think about pretty much every time you look at your checkbook or think about your checking account. How am I looking down the road? This is an automatic way of creating a forecasting mindset. It's a good way to do it, burn rate. Why should an entrepreneur build a worst case scenario directly into their cash flow projections? And we hadn't talked about this, so I'm asking you to think about it. Why should you think about a worst case scenario? To artificially lower your actual state of income obligations, to force the business to switch immediately to cash accrual, to stress test operations and map out concrete expense cuts before a crisis occurs, to guarantee that their sales team hits the highest possible margins. Now, this is kind of a thinking one. I'm getting some answers over here that are saying C. Why should you have a worst case scenario? When would you do that? When would you have a worst case scenario? Well, worst case scenario, the answer is C, to stress test your operations. This is when you're creating a quotation or a contract with someone, and you're figuring out how much money you're going to make. What's your profit margin going to be on this deal? It's always a good idea, as we talked about in a couple of last semester, to do your planning with the best scenario. That is, if everything goes fine, I'm going to make this amount of money. I don't have a home run. If things go average, I'll probably do this. But if things are really tight, I know I will at least make this amount of money. In other words, that's going to be your worst case scenario, and you figure that out, and that helps you plan when you're negotiating and you're coming up with what your bottom line is that you'll be able to willing to take in the deal. It's also when you're looking at you're doing your cash flow planning, you see how much money you got in the bank, you see how much money you're supposed to be getting from accounts receivable. So you don't always say that in real life, I'm not going to get all that money from cash receivable, or some of it's going to come slow, or before it gets here, I'm probably going to have a surprise. So you're planning in your business management thinking, you got in your head was it's always not going to be a rose garden. I'm going to need to plan my worst case scenario so that I don't run out of money, and I plan accordingly. That's forecasting cash flow. It is really important for you. Okay, I hope you enjoyed that. I'm mixing it up on my presentation a little tonight. We're doing these questions as we go along. Okay, negotiating now, plain talk. Always ask someone when you're buying something or you're negotiating a price, don't be ashamed to say right up front, what is your best price? Let's quit messing around here. I like what you've got here. I'll plan on it if I can get I'll buy it if I can get a really good price on it. But you tell me what your best price is right now. There's no reason for us to sit here and haggle or worry about it. I know you've got room here to wiggle. Tell me what that best price is. Do it. Do it. Most people selling stuff are expecting you to ask that or hoping that you don't. But if you do, they're prepared to give you a discount right then. When you say, what is your best price? Let's just go ahead and nail it down. They will automatically drop your price. And how much did that cost you? Not one red penny. But you have to have the assertiveness, the initiative, the motivation to say to them, now tell me your best price. Okay? Do that. As we talked about in several weeks ago in several semesters, we're going to build in negotiating with our money, but if you don't ask them, if you don't get the ball rolling on negotiating, you're not going to get the advantage of that money, and you're going to spend money that could be staying in your pocket. Learn yes, if, and no, but negotiating. Learn to keep talking, keep the conversation going. Do that. It's not called haggling. It's being smart. It's opening the door to negotiation so that you're not saying take it or leave it. Keep your prices high enough to give you room to bargain, to negotiate. Don't be afraid to add more money to your sales price. Most entrepreneurs start out selling their items too low or cheap. And if it's too low in the marketplace, the market considers it without value. The way to have people to consider your product to have more value is to price it higher. And that then gives you more room to negotiate and therefore a better chance to end up with more margin at the end of the day. These are the basic threes in negotiating I really want you to remember. Now, your study guides here are really important. I want you to pay close attention to the study guides that I'm sending to you, especially the ones related to negotiating tactics, employees. They go deep into it with some great tips that we don't have time to do during a webinar, but there's some great studies in here. Those of you that are preparing papers for studies, pay close attention to that. They're good study guides about body language and nonverbal communications as well, so pay attention to those. So talking about closing deals, talking about win-win situations, and that's what we want to do, to find the win-win solution. So I'd like for each and one of you to go over to your chat and type in 2 words, win-win. Type those in. Let me see that you're paying attention. I'd appreciate it. Win-win is our goal as a long-term successful negotiator. We think about that as we go in. When we're dealing with someone negotiating, we want to think about them as being our negotiating partners, not as our enemies. Win-win means that we're working for a good deal for both sides. We're working for both parties to want to come back and do business in the future with each other. That's what win-win is about. If you're only negotiating based on price, someone's got to lose. And if the tone of the negotiation is all about the almighty dollar, getting it down to the lowest penny, and that's all that's being talked about, and there's a battle going on to do it, someone's going to lose. And that is not a win-win situation. Even if the deal is closed, even if you're successfully getting what you wanted at the price you wanted, if you had beaten someone down to a point they felt like they had lost the deal, and they probably don't want to do business with you in the future, that's not a win-win. I like to see deals that end with both sides happy with each other and saying, thank you for working together, look forward to working with you in the future, and you're a great negotiator, you really got a great deal here. That's what you're after. The win-win negotiator is going to go after the best way for both parties to come out smiling and feeling good about doing business again. That's what win-win is for. Now, through the years, I have found that negotiating with people, and I find myself in a position with the other side, with my negotiating partner, just they have put themselves on a rock. They have locked down at a certain position. I can't move them. It's a certain price or a certain detail. You can't go forward. And then you get down to the point that it's so easy to say, well, take it or leave it. It don't look like we're getting anywhere. And that's the difference in a professional not knowing, someone that's not a professional and not knowing what to do, because many times one of the parties in the negotiation will get to a point they just stop. They say, this, I got to stop here. I don't have any more money, or I don't have any more flexibility, or this, or whatever reason. And what are you going to do now? You're going to walk away from the deal. You're going to say, take it or leave it, and walk away from the deal that you worked so hard for, or are you going to open it back up? And when someone gets to a fixed hard position, my friend, here's what you need to do. You need to think. You need to take some time, and then you need to start asking open-ended questions. In other words, you ask questions that are not related to the exact reason that's got them stopped, but you try to start opening doors and conversations so you can get more information to find out where there's some flexibility. And you're serious about that, and you let them know that you're serious, because look, your deal is very important. I want to find common ground here and move around. So let me ask you about this. What is it about this issue that can be changed to help you? What can I do to improve my offer? Can I maybe get less deposit? Maybe can we change the interest rate a little bit? Can we get a little bit better delivery rate? Or maybe how about on delivery or assembly? You ask open-ended questions to get more new information from your negotiating partner to help get them off of that fixed position. But you just don't close the deal down and say, well, I'm sorry, you just have to take it or leave it, because we're not going to do that. That's not what you do as a professional. First time I mentioned this as well, and it's important that I say you don't need to be in a hurry to talk. Some of us think that if there's a silence in the room, someone needs to be running their mouth and talking. We all know folks that cannot be still and quiet. Well, if you're going to be a successful professional negotiator, there is a time when quietness is very important. Because if you're the one that's seeking an opportunity to find common ground with a customer, and you're asking open-ended conversations, you don't need to rush into that conversation or pressure them into a quick answer. You might even say, now let's take our time here and figure out what works and slow down the conversation. Rushing the conversation in a negotiation doesn't work because that's a pressure technique. And most people will put up their defenses when you do that. Quietness and patience are virtues. And quietness and patience gives you the critical time that you need to come up with the best answers and the best responses. And it gives your negotiating partner the critical time they need maybe to think about something and give you a little chink in the armor there that will help you get the conversation moving on. So, simple point, don't be in a hurry to negotiate, okay, with your customer. Don't push them. What is the determining factor for professional negotiators to get the deals done? The question is, can you forecast? You as an individual now, can you forecast how a negotiation will go? Can you forecast a successful negotiation? Well, I've been watching some of you now for several years, and I know that you can because I'm hearing what you're saying back and forth just basically from our conversations. And listening to Kia and some others, even negotiating a cleaning contract or a repair bill. These little tips can go a long way. But it all gets back to total preparation. Knowing in advance that you're heading into a negotiation and knowing that you're setting the mindset up of what do I need to say and do to have the best chance to have a win-win deal here. Take notes, put the goals down, know what your pricing is, your targets, what concessions you can use. But it's total preparation. Knowing that I'm going into a negotiation tomorrow morning means to me that I'll be sitting out here in the office an hour or two before I go making notes and saying things back and forth to myself and making notes on what are the probable questions, what offers will they probably make, what is my high price, what is my lowest price, what are two prices in between that I can offer as negotiating points and still end up at the end of the day making the money we need to make. Doing that in advance keeps you from being put on the spot and not prepared. And it improves your chances to have a better negotiation, a win-win negotiation for you and the customers by 90%. 90%, not just flying in like a bumblebee and landed somewhere and make an offer, but coming in well prepared, well documented, knowing the different steps that you can make, knowing what your high dollar is and your low dollar and what you need to do in between as you're negotiating goes a long way. Preparation as you're coming in is all about making the right introductions, setting the stage to begin with. I'm so glad to work with you, looking forward to it. I know we're going to have a win-win situation, so at the end of the day, we're both going to be glad we found this and do business for many years to come. If you set the stage like that, there's a chance it will work. There's a good chance it will work. At least it sounds good and softens a bargainer on the other side. Maybe you're coming across as being soft and makes them feel like they're going to take advantage of it. Well, if they feel that way and you're well prepared, you've really got the advantage. But the key is introducing yourself in such a way that you're saying that, hey, let's both find a win-win deal here and get a relationship started for a long time. People want to do that. The customers you want for the long term They want to hear that, and it's up to you to set the stage. Those few sentences, right from the opening comments that you make in person or on the phone, or even in an email quote, go a long way. Talking with, sitting with, standing beside, such as that is important. So if you find yourself in a room sitting at a table with someone negotiating, I suggest that you sit beside the people. Sitting across the table is like you're on opposite sides. And through the years, I found out if I come in, I find someone right in the center of the table on one side, and there that chair is on the other side of the table waiting for me, I would literally go over to their side of the table and move a chair and sit beside of them and say, let me sit beside of you here. I'm going to be on your side so I can show you some things here. It changes the mood. If you're sitting beside someone, they're negotiating partners. If you're sitting across the table from them, it's not that situation. But if you are across the table from them, then you come forward with the good verbs, with the good sayings about looking forward to working with them for a win-win. That sets the stage for good communications. Sometimes the very first few seconds in a negotiation sets the tone. Either you're here to work together and find common ground and win-win, or you're here for one side to beat the other side down on their profit or on their price. And if it's all about the money, somebody's got to lose. So you really need to try to change that as best you can. The documents you bring in the room are important. If you think you know it all and you've got it all prepared and you just walk into the room with a blank sheet of paper and a pencil or a pen ready to make some notes or scratch out this or that, you're not prepared. But if you know what you're coming in to sell, what you're coming in to do, what you're coming in to negotiate, and you've got a list down on a paper, typed, written out, ready, a proposal ready. Maybe you left the bottom line blank, but you already know in your mind what figures maybe will go on that bottom line. Coming in prepared that your paperwork is a work of art is a big deal. It gives you the look that you have come prepared. You're taking this very seriously. And by golly, you want the deal, and they're very important to you. You want to come in with a list either in your mind or in writing of frequently asked questions. Once you've been in business a while, your customers ask you the same questions over and over and over and over again. You have a good idea on what the customers are going to ask you. Go ahead and write those questions down and come up with a really cool, good answer that makes you look smart, that makes you be smart, makes you be better than the competition. Big, big deal. Now, the thing that I want you to write down that I'm not on the screen here, I want you to write it down is be a winner. Be a winner. Your whole attitude when you're entering into a negotiation, if you have the attitude that you're projecting to the customer, I got this. I'm prepared. I got the best product. I got the best price. I'm bringing you a really good deal that you're going to love, and we're going to be a win-win situation. If you're coming into the negotiation and you're projecting to your negotiating partner, I feel like we're going to do this deal, and I feel so good and happy that we're going to get together. If that's your attitude, it is magnetic. It transmits over to them that says, hey, this fella's pretty sure of himself. He feels good about making this deal. He must have a good product. Must have a good thing to offer, instead of all the other negative things that we can say. It's up to you to set that stage. It's up to you to say, I'm good, my product's good, you're good, we're going to have a good day here. I'm glad we come. This isn't going to take long. Let's make this deal work for both of us. Win, win, makes you a winner, makes your customer a winner as well. But how about that planning now? Getting down to the negotiating now, whatever you're selling, whatever the terms is, you've got a high and a low mark that you've got a bargaining range. And before you ever get there, well in advance, you have in mind what your advertised price is. That would be your high dollar. But also you know the 2 or 3 steps that you can negotiate down and still make the money you need to stay in business, but not as much profit as you want. But you don't want to just duck down to the very bottom line to begin with when they say, now tell me your best price. Now, when they ask you for your best price, yeah, you've got bargaining room, so you're going to drop down a little bit, and maybe you'll close right there. Or maybe they'll want to keep on negotiating if they're a good negotiator, and you'll be ready for that. Remember, there's three kinds of customers: those that don't pay you what you asked, those that want a discount in the middle, and those that don't care whether you make a penny or not. They want the cheapest price, and you need to be prepared to take any one of those three out of the market and get the deal. That's what total preparation is going to give to you. And you do that by having a roadmap of your different offers that you're going to make and counter offers that you're going to do. Now, there's some secret weapons, some really important secret weapons that you have that maybe you had never thought about. But the secret weapons are your value-added features. That is, what you can say to that customer that you can bring to the table that other competitors are not bringing to the table that may help you close the deal. And those negotiating points and offers here and there, you want to think about what you can do special. Maybe you're closer to them. Proximity, maybe you can offer quicker, faster service. Maybe you can do a better job with assembly or delivery or telephone support or touch-ups or winterization or some special things that you can do that the competition probably can't do or doesn't offer, hadn't thought about it. And usually it is they haven't thought about it. But you have, because your total preparation. And my friend, once you do this with one customer, once you start this process, I mean, it's going to work for all your customers. You might have to make some adjustments in the different sheets that you printed out, because you don't save all this work. So that when you go into this next customer with a certain model of thing you're selling or type of service you're bringing, you'll just make some adjustments on that sheet and change over the template, and you got your paperwork already. But have your value-added things ready. That's your secret weapons. That's not things that you bring out until you get down to the final negotiations to do that. Now, your last important secret weapon is you, and it is your understanding that negotiating is a drama. It's a drama. It's like a play. And closing a deal is the heart of the skillfulness. You need to realize when the customer is telling you they've heard all they want, they're ready to quit talking and start buying. So you need to recognize buying signals. And you need to get a sense when it's time to stop talking and start selling, start closing. And once that time is here, then your skillfulness in capturing the moment. Capturing the moment is the critical difference in whether or not professional salesmen get the deal or they do not. When you're ready to close that deal and you have moved them to that direction, it's time for you to realize you need to become an actor, actress. Talk softer. Look them in the eye. Start using gestures. In other words, get personal, get serious. Move away from distance, but lean in. Get their attention. Look them in the eye. Lower your voice down, and stop talking so fast. Slow it down so that when it's time for you to close the deal, you've got their attention and you ask them, say, let's go ahead and move forward and close this deal now. All you have to do is sign here or do this, or you have your way of doing it. But the key is when it's time to start closing the deal, bring the drama in and capture the moment. Don't let it fly by. Young, inexperienced people or people that just never got it don't understand this. The person that wants to reach in their pocket and give you your money out of their pocket, they want to get personal about it. They want to know that you're serious, that you want their money, that you're just not a highfalutin professional salesperson that knows everything about everything, but you want to do business with them as an individual. And when they know that, it is so important. And this is true whether you're talking to them in person, eye to eye, or on the telephone. And you can send messages that get this across even in email. But having the opportunity to talk like we're doing right now and being serious, I really want your business, I really appreciate your business, it's a good deal. Let's make it happen right now. It's a good deal for both of us. Get serious, get quiet, capture the moment, will go a long, long way for you. And it's a secret weapon that you can use, and you'll get better and better and better at it, and the customers love it and I want to come back and do business with you again. A best alternative to a negotiated agreement. We need to be really aware of the fact that before we go into a deal and close a deal, we need to have in our own mind what you can get that deal for and how much it's going to cost you, and then you start negotiating. If you don't buy a truck, go find the truck you want to buy, get a good deal on it, don't close the deal, find out that best price, and then go negotiating. So in other words, you're going to start serious negotiations after you find out what a good deal for you is, and then you're going to go out and try to beat it. That's right. You can go out and try to beat it. BATNA. It's a worldwide rule in negotiating. That's why you don't need to be in a hurry. If you take your time, you do your homework, you're going to be satisfied that you get the good deal you can find. Then you go out and you keep shopping, you shop hard, you see if you can beat it. And then you know where you really stand in the marketplace. Doing this is one of your very best ways to find out where you stand with fair market value. Having those comparisons to make go a long, long way in doing that. We don't want to ever get caught up in the take it or leave it, and the best way to do that is to use yes, if, no, but negotiating. I've written a book on this. It's just a little work pamphlet. It's very inexpensive at Amazon. I basically covered all the bases in the handouts that I'm sending to you. But if you wanted to get a copy, I wanted you to be aware of it. Yes, if, no, but is the way you keep the conversations going instead of saying take it or leave it. Basic fundamentals. Do not give up anything unless you get something in return when you're negotiating. It's a balance and scale act. We're always going to keep that in mind. Yeah, if I don't give a concession away, I want to get something back. Let your customers make you the first offers. You set your advertise marketing price up high. Let them make the first offer, and then in your preparation, you know what different counters, 2 or 3 or 4 counter offers can be below that. It puts you in a position to start off the bargaining to end up at the goals that you need. Always ask, what is your best price? Give me your best price. Demand that they give you your best price. It's the least expensive way to get a concession without having to give something up. Don't close the process again. Keep talking, keep hope, and close your deal. The tactics employees are long and list a long way. There's 21 of them, and in your handouts are all listed. I suggest that you read them. But the ones that are most often used are burst your bubble. That's when someone makes you an offer that says, now I'm going to make you a really low offer. Would you consider it? In other words, they're setting you up for a low ball offer. And your answer will be, oh, yes, always. Everything starts when I get an offer. Don't ever refuse an offer. Flinching is like old Fred Sanford did on Sanford and Son, the old comedy series. Oh, my gracious, I'm having a heart attack. That price is so high. Flinching is showing a physical reaction to a high price. And indeed, sometimes just showing that physical reaction, even with a little comedy involved in it, will get you a good discount. Somebody gives you the price, just look at them like they're crazy. Silence, don't say anything. Again, silence is a very valuable tool in negotiating. And oftentimes, if you don't say anything, the inexperienced negotiator will come right back to you and say, well, I can do a little better than that. So you just sit there and wait for them to come back with the answer. In this world of inflation and tariffs, pending price increases is a good bargaining tool. Let's say, we really need to close this deal now. Well, I got these before the price goes up. Is a good time to buy. The red herring is important. That's when you're talking about something, one thing to keep their eye off the ball. For example, you're selling them a used pickup truck, so you talk about the new tires, but you don't talk about the dent on the other side. Retreating to higher authority is when someone says to you, yeah, I'd like to buy this, but I need to go back home and talk to my daddy or my wife or my boss or somebody like that. They're retreating to a higher authority, and when they do that, you can bet when they come back, they're going to have a lower offer. So if someone's selling, you're always going to want to set the stage. Again, this is being savvy. You want to set the stage and say, now look, I came to do business today. I got my trading pants on. If we reach the right number, do you have the authority to close the deal? You generally want to ask that question every time you think there's a chance that someone's playing you. Because when you do, they will generally say, no, I need to get the best price, and then go talk to somebody. Well, when you know that's the situation, you always want to hold back one bargaining point, one negotiating point. Because when they come back, they're going to make you an offer, and you want to have a little bit of wiggle room to deal with that. Split the difference. That's finding the difference in the two offers is a good way to do a deal. Show me the cash, one of the strongest ways to close a deal. Nibbling is the most popular way of negotiating. That is when someone, you're closing a deal and then the people keep nibbling. They want a little bit more, another little thing here, another little thing here. Keep eating into your profits. Very common, and people are very good at that. The way you counter that on the other side is when you close your deal, you initial it, circle it, and say, okay, here's our number. And then when they start nibbling and say, well, you are going to throw this in, or you are going to put that in, or how about this and that, then that's when you come back to yes, if, no, but. So, well, sure, we can put that in, but it'll cost this much more because here was our deal, so we don't need to add a little bit to cover these extra things you want. That's a good way to make money because people will always do it. They'll keep nibbling, and oftentimes they're trying to get it for nothing, but they will let you add to the price to help your situation. Take time to read the negotiating ploys and such as that. Be aware that buying signals are very important. Most inexperienced salespeople talk themselves out of deals because they don't recognize the buying signals. When people are ready to buy, you need to move forward and wrap it up quickly. Get your money, get your signatures, get all your paper written out. That's why it's important to have your documents ready. And then once you got your deal, you shut up and you leave. Buyer's remorse is a real thing. It means you don't need to run from the deal, but when you close the deal, you make sure that you tell the people what a great negotiator they are, how much you enjoy doing business with them, and you know they're going to love this thing, and it's important they do it. Our goal here, my goal for you, is for you to become a great negotiator. After 60 years, I've dealt with some great negotiators from big business and small business, and the best ones have always end up being the ones that I always want to remember the most are my good farmer customers through the years that I've been negotiating with their poor mouth and want to get the very best prices they can get. We've had some customers that indeed bought all their stuff from us, all their tractors from us, and they're loyal customers, but they generally all had a very common denominators. To be the best negotiator that you can be, and then that means that you're going to have the best vendors that you can have that are going to give you the best pricing. You want to be serious. You want to have the cash to back up what you're saying, to do what you're going to do. You want to create a reputation of being 100% trustworthy. When you speak clearly and you listen to what people are saying and make sure there's no misunderstandings and establish a historical pattern where this vendor or this customer will know they can trust you. They look forward to seeing you. The secret of your business, staying in business a long time, is not only your ability to sell to customers, but it's your ability to maintain a great group of vendors and providers and suppliers and subcontractors to you. Those are just as important a part of your business as your customers are. And you keep those customers and you maintain those relationships by being a great negotiator and a person that's trustworthy and dependable, and a giver and not a taker. We have to find common ground with these people. This is not a dog-eat-dog world if you want to stay in business a long, long time. Be that great negotiator. So a little bit over a period here, a little bit quick forecasting quiz. You ready? Number 9. What does the concept of expanding the pie mean in a win-win negotiation strategy? Being stubborn, sticking to your demands, splitting monetary differences, introducing non-monetary items value to create mutual gain, threatening to leave the negotiation to force an immediate negotiation. What do you think? What do you think? The answer is C, introducing non-monetary items to create mutual gains. If everything is about the money, someone's going to be a loser. It can't be a win-win. So you find ways to make sure you got a win-win situation. In a formal business negotiation strategy, what does the term BATNA stand for? We talked about that earlier, and that would be C, best alternative for a negotiated agreement. That means you want a plan B before you start negotiating. Question 11, when a vendor or client locks into a rigid, stubborn price demand, what should a win-win negotiator focus on? That's what we talked about first tonight. What should you talk about when someone's got themselves on a rock and they can't move? The answer is B, ask open-ended questions so you can find out where you can find common ground. This is the place where you use yes, if, and no, but negotiating. Number 12, what is the strategic silence consideration? Why is it considered an incredibly powerful tool during a high-stakes business negotiation? It legally shifts the contractual liability over to the opposing party. It signals to the other side that you're completely unprepared. It buys you critical thinking time and naturally prompts the other party to talk and reveal details. It automatically invalidates any verbal offers. This is maybe one of the most important parts for the night's lesson for people just getting started in business. Answer number 12 is C. Silence is so important because it gives you time to think and it gives the other person time to think and helps you both find common ground. Don't be in a hurry to talk and fill the void of silence. So bring it in for a landing. Thank you so much for the lesson. I went through a lot of stuff. I know that some of you that have attended this classes before, it's been changed up. I hope you've enjoyed the new format and learned a lot, and I certainly look forward to working with you. Next week, we'll be talking about selling secrets. We'll pick up on some things we talked about tonight. Basics in first-year taxes, depreciation, and deductions, and paperwork. Important stuff, and we'll wrap up our whole semester next week. So how about some comments? I'd appreciate hearing from you with any comments that you have. Thank you for attendance, and you new folks that are with us tonight, looking forward to working with you in the future, and I'll stay in touch. Thank you very much. Any comments?
Steve, I just want to take a minute and say thank you.
Thank you, Raymond. I hope I gave you some stuff that'll help you.
Oh, yeah. I've learned a lot.
Very good. Look forward to working with you.
Yes, sir. Yes.
All right. Anyone else? Well, again, thank you all. I hope you have a great week. God bless you and your family and your business. And like to say at Walton's Mountain, good night, John Boy.
Thank you, sir.
You bet you.